Grayscale, the largest cryptocurrency investment manager, is launching the Grayscale DeFi Fund, focusing on decentralized finance tokens based on the new CoinDesk DeFi Index. Grayscale and CoinDesk are both subsidiaries of Digital Currency Group. Joining us now to discuss is Michael Sonnenshein, CEO of Grayscale. Welcome to the show, Michael. So this Grayscale DeFi Fund is Grayscale's 15th investment product and its second diversified fund offering. But first off, can you explain in very simple terms what DeFi is? What is your definition of decentralized finance?
Sure. Well, it's great to be here. Thank you guys for having me back on the show. I think from our standpoint, what we're seeing now is the development of other parts of the digital asset ecosystem that are creating new protocols for new use cases. And I think DeFi is certainly no exception to that. Truly at its core, what DeFi means is the actual meeting of traditional financial services with decentralization. So a lot of the services that users or investors, really any financial services participant may go to a bank or a brokerage or any kind of intermediary to get anything from trading to lending to borrowing, is now being looked at and developed on these decentralized networks. And the Grayscale DeFi Fund is now a way for investors to invest in these protocols through a singular investment vehicle and get exposure to many of the assets within that broadly defined DeFi space.
Good morning, Michael. How is this going to work? Are holders of DeFi tokens going to essentially lend it to you, lend it to Grayscale? Is it going to work like the GBTC? How is this fund going to work in terms of where you're sourcing your tokens and selling it to the market?
So all of the Grayscale products, including the Grayscale DeFi Fund, are solely and passively invested in the underlying digital assets that make up the fund. So in this case, the Grayscale DeFi Fund has about 10 constituents at launch. And on a quarterly basis, different assets will qualify or disqualify to be included in the DeFi Fund basket. We source all of our assets through our sister firm, Genesis, which is a registered broker-dealer. And so we are taking all of the appropriate precautions to ensure that we source the underlying tokens as investors are coming into the fund from regulated counterparties. And we know the source of funds as they invest in the product itself.
Good morning. Congratulations on the launch. Could you tell us a little bit about what you see as the unique risks facing DeFi, either on the regulatory front or elsewhere? Because the risks seem a little bit different from those that face Bitcoin.
I don't think it's as differentiated a scenario as it is from other parts of the digital asset ecosystem. I think many investors have continued to come to Grayscale really because we're providing them with an investment option that fits within their existing regulatory frameworks and allows them to access crypto in a way that feels familiar. Certainly DeFi, however, I do think is a newer part of the crypto ecosystem. And so as investors think about whether or not diversifying their crypto portfolios into DeFi is something that they want to do, they should certainly consider where DeFi is in its evolution as compared to other parts of the crypto ecosystem that have maybe been around for longer or have already gained greater adoption or traction within the investment community.
Hi, so Michael, the exposure to Uniswap, it's almost 50%. It's half the index. Does that provide? Does that make it too exposed to Uniswap? And is there a way for fund managers to? Is that something that you think is beneficial to fund managers who are, let's say, benchmarking to the index?
Well, so this is a diversified offering, and it's a market cap weighted product. And so what that will allow is that over time, as investors remain invested in the product, the fund will, because of the index construction and methodology, will continue to keep higher weights to the assets which constitute a greater part of the DeFi protocols and a lower weighting to those which are gaining either less adoption or are less valuable compared to others out there. And so while this is the fund composition and weightings today, that's not to say certainly that this will be the composition of the fund when we get to the first quarterly rebalancing at the end of Q3 or at the end of Q4, in which case, we certainly do expect DeFi protocol, as a level to continue to morph and evolve. And certainly we'll see both new assets come into the fund, assets leave the fund, as well as see those weightings shift over time.
We've heard from members of Congress, Michael, that they are concerned about decentralized finance and the potential that it has for illicit activity, and they want to look at it more for KYC and AML. How, I know you answered this with Emily, but maybe you could go over some of the risks regulatory-wise as more governments start to address and look at DeFi.
Well, I think the DeFi protocols that we're seeking to put into the fund these days are things around decentralized exchanges, lending, borrowing. And so to your point, they certainly do challenge a lot of those existing financial services offerings that investors are typically used to seeing. We believe that it's only a matter of time before we'll see increased, regulatory clarity provided around some of these assets. And I think that's true of the digital currency space overall. I think it's a space that's evolving rapidly. And so to see regulatory attention being paid to this, I think is an excellent thing. I think investors are really moving towards this idea of a sharing economy where some of these protocols can allow them to access some of those same products and services that they maybe rely on for banks today, but can instead do so in a completely distributed way. And so over time, you will see, more KYC, AML implemented in a lot of these different protocols.
Just ask a sort of larger market question. How much do you expect DeFi to correlate with Bitcoin prices going forward? Or are they completely two totally separate worlds? And also, looking at Ethereum, Ethereum has been known to sort of be the engine of DeFi. Do you think it will stay that way, or do you expect that to change? So I guess for people following DeFi, will there be correlation between Bitcoin and ETH prices?
It's really tough to predict. I think based on the user adoption that we're seeing around DeFi and DeFi protocols, we do think the future for this area of the market is bright, and again, are certainly launching this DeFi fund, certainly not only based on our own work within the ecosystem, but also in response to investor demand. And again, investors really wanting to think about diversification within their crypto portfolios. So going beyond just having exposure to either Bitcoin or Ethereum or some of the large cap coins, and also ensuring that their portfolios encompass other parts of the digital asset ecosystem. To your point, Emily, though, a lot of the DeFi protocols are built around Ethereum. Hard to say whether or not that'll continue to be the case over the long term, but certainly that has been, to your point, the fuel for a lot of the DeFi adoption we've seen.
Michael, a lot has been made about this unlocking of shares of the Grayscale Bitcoin Trust, and that there might be some downward pressure on the fund, as well as perhaps a boost in Bitcoin, as people who are borrowing money to buy shares in the Grayscale Bitcoin Trust would potentially have to buy more Bitcoin in the spot market. Would love to get your take on the whole speculation around that.
Yeah, so I think that it's important to think about just the market dynamics that are at play here. Just to level set for everybody tuning into this, the Grayscale Bitcoin Trust has historically created shares at net asset value. And after a 6-month holding period, those shares become eligible to be sold into the secondary market. And so if you look back historically, 6 months ago, 7 months ago, several folks have been thinking about and writing about a large amount of assets that were put into the fund 6-7 months ago and should now be making their way out into the public market. Now, I think what's interesting about this dynamic is that even though the product is an open-ended structure, on the secondary market, it trades more like a closed-end structure. So there is no redemption of shares. And what we've seen now at the moment is, probably about a 10% or so discount to the net asset value within GBTC. And so it's difficult to predict exactly what the effect will be of some of these unlockings, whether investors will, sell those shares right away, or these continue to be Grayscale investors that typically have longer term horizons for their investment in Bitcoin. However, I would share that we have started to see quite a bit of institutional capital and smart money moving into the product and looking to deploy assets into GBTC at a discount to NAV, because it does allow them to own or control more Bitcoin than if they were to take that capital and buy Bitcoin in the spot market.
So, Michael, does the composition of your counterparties, does that change? You know, for instance, we're seeing some people potentially getting hurt because the premium went to a discount. For instance, the question is, was BlockFi affected, for instance, by this change from premium to discount? We noticed that they're providing lower rates relative to the market to their customers, and the speculation is wondering is whether or not companies like that were affected somehow because of the change from premium to discount. Does your counterparty composition change?
Well, investors who buy the private placement and then get that liquidity after 6 months have that optionality to sell those shares out into the public market anytime after that 6-month period. We don't have direct visibility of when investors sell their shares because they're moved back to their brokerage account or their prime brokerage relationships, in which case they have complete discretion as to whether or not they remain invested in the shares or sell out of them. So it'd be difficult to opine on specific customers or clients.